Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 11th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we are heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. And we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And let's get started here as always with the S&P 500 heat map. As you can see, it was a nice green day for the U.S. stock market with the vast majority of stocks closing higher. Oddly, we had Apple sitting out today's rally. It was down 0.28%, but they were somewhat of the minority in that case. Tesla also had kind of a break-even type of a day. I guess in the end it was up just barely by 0.07%, but you didn't really get much help from Apple or Tesla in the market rally today. However, you had plenty of help elsewhere. Many of the other ones, including Amazon. Of course, today's a big day for Amazon, right? We've got our Prime Day out there, so if you've been waiting around for some shopping deals online, I suppose today's the day to get to work. So Amazon was up 1.3% today. Alphabet was up about 0.7%. Microsoft was up 0.19%. Nvidia was up 0.5%. Meta, of course, been in the news a lot lately with their Twitter killer, so to speak, their new Threads service. Meta is up 1.42% today and hit a new, I believe, 52-week high here today, last I looked on the chart. So those are some of your big hitters. In terms of smaller players that had more successful days on a percentage basis, you can see that ATVI was one of the big kahunas here today. Now, ATVI is, of course, Activision Blizzard, and it is a company that has been rumored to be bought out by Microsoft for really the last, year and a half or whatever it's been. It's not even a rumor. I mean, the companies themselves have come out and said they want the deal to get done, but regulators have had different thoughts about that topic. And today they received some rare good news where all of a sudden it seems like the deal might just get done if the companies are willing to spin off some smaller pieces of their business. So those people that were playing the arbitrage game there with shares of Activision Blizzard in their account, including Warren Buffett, by the way, remember he has been doing that arbitrage play for quite some time, ends up with a smile on their face today with that stock flying higher, the best performer in the entire S&P 500, up 10%. Now, some of their video game competitors also did well today. Electronic Arts, EA, was up 5.2%, and then Take-Two Interactive, that's the company behind Grand Theft Auto and a couple of other, I think Red Dead Redemption and a few other popular video games out there. I'm not much of a gamer myself, but perhaps those of you that are a bit younger are into that sort of thing, and they were up about 5% today as well. So Activision kind of lit a fire under their competitors with, I suppose, the philosophy that, if regulators do allow Activision Blizzard to get bought out by Microsoft, that maybe Electronic Arts and Take-Two would be takeover candidates from other big tech players out there. So we shall watch that and see what's taking place there moving forward. Etsy had a pretty big day. Etsy was up about 9% today, so just shy of Activision Blizzard. You also saw that 3M had a rare update. That stock, of course, has been a house of pain for a few years at this point, but they did get a brokerage upgrade here today, and the stock was up about 5% there. A lot of the oil companies did quite well today. Schlumberger was up about 4.5%. APA Corporation, the old Apache, is up over 6% today. Halliburton had a nice day, up over 4%. Conoco up about 3%, EOG up over 3%. So some big movers there in the oil patch all of the sudden. We did have a few tech stocks on the move. We saw Hewlett Packard up about 6% here today, so that was a very strong performer within the market. Also, Salesforce, much to my chagrin, as I had a bearish trade going on that one. Their news this morning was that they came out and priced or hike the prices of their services by 9%. Go figure. As soon as I take a bearish trade on something, a company comes out and says, yeah, take that. We're going to increase prices, and therefore our margins are probably going to go up. So all of a sudden, Salesforce got a boost out of nowhere there. Had a pretty solid day, closing higher by 3.93%. We also had a pretty good day there out of Gen Digital. It was up 2%. Let's see what else was out there. Some of the banks did okay. U.S. Bank was up 3.5%. You know, the banks, of course, are going to be in focus later this week as we've got stocks like J.P. Morgan and Citigroup and Wells Fargo reporting their earnings at the end of this week, as is BlackRock, by the way. BlackRock's not really a bank as much as it is an asset manager, but they were up 2% today. There's been some buzz out there that BlackRock might secure the world's first Bitcoin spot ETF. We'll see if that happens or not, but stock was doing nicely here today. In terms of other industrials, Generac had a nice day. That's a stock that we've covered in two different of my classes here recently in the last month or so. That stock has kind of lit a fire under itself ever since we've been having some more difficult storm conditions here in the United States, and it was up another 4.5% today. Carrier Global, the old spinoff from United Tech, was up 3.39%. So, all in all, a lot of positive movements out of the market here today. In terms of those that did not participate now, the biggest one that stands out to me was Eli Lilly. It was down 3%. Remember, this has been one of the more successful healthcare companies, at least here in the United States, over the last year or two. A lot of that is as a result of their involvement in the weight loss drug. They also have some irons in the fire with Alzheimer's and a few other areas that could be quite lucrative. But today was a rare day where they kind of sat things out. And I was looking at that chart earlier. We actually own this one in my top-down trend trading class, and we have for many months. So it's not a recent holding of ours, but we've been riding that trend higher for a long, long time now. I did notice that it broke down below its 30-day moving average here, either today or in this most recent move lower. So just be on the lookout for that. Not to say that has to be the end of the move, because obviously they've got a lot of good things going for them. But all of a sudden, the stock's chart is kind of behaving a little differently than what we had been used to in the past. Merck was also down today, over 1%. Johnson & Johnson was down about 0.5%. Amgen was down about 0.39%. We had United Healthcare just under the break even. They have earnings coming out this week as well, so that's one that some people are going to keep on their watch list this week. Intuitive Surgical was down a little bit. We actually covered the healthcare sector in my dividend growth investing class here today. So for those of you that are premium members of Market Scholars, I do have that recording posted. Feel free to check that out if you have an interest in which two companies we had in a head-to-head matchup here today and which one we added to our portfolio. We saw that the consumer staples struggled today as well on a relative basis. Notice that Procter & Gamble was down 0.5%, Pepsi was down, Monster Beverage was down 1.5%. That had been a pretty strong growth stock within the consumer staples space in recent years. Of course, that doesn't happen all that much these days. You could probably throw Celsius into that conversation as well. So every so often you'll get kind of a new product launch or something like that within the consumer staples. But traditionally, that's kind of a more boring area to be hanging out. Mondelez also had a tough day there. Perhaps the Oreo cookie not getting enough love here recently, as that stock was down 1.68% today. In terms of more tech-oriented companies, I mentioned Apple already. It wasn't a huge down day, but just kind of surprising that we had such a nice day otherwise in the market that Apple sat it out. You also had Netflix sitting out today. It was down 0.34%. Synopsys, it's one of our coffee can stocks over in my top-down trend trading class. It's been a phenomenal performer over the years. It was down 1.5% here today. So not a whole lot of patterns out there in terms of The losers of the market, I would say kind of consumer staples and healthcare felt like if there was any pattern out there, those were the ones that probably suffered a bit more than others. All right, let's go ahead and pop on over here to the main part of the platform now. And wanted to show you real quick here on the breadth numbers that we had 414 advancers versus just 85 decliners today. So an overwhelming victory for the bulls. You know, that's about 82% or whatever it is to the upside for the market today. So very, very solid day. And of course, we've had a lot of solid days in the market lately. Let's go ahead and turn our attention now to the main foregrid that we use to kind of talk about our posture using the market forecast technical indicator. And as you can see here, I've got chart 4B pulled up, and the S&P 500 was up 0.67% today. It continues with its strongly bullish posture. As you can see with that background color of the chart, anytime it's green is when you have a bullish posture. Anytime it's pink is when it's bearish. And for the last 3 months, it has been very, very much more bullish than bearish along the way. And that includes today. So we're not quite back to the highs that we set on June 30th yet, but we're knocking on the door. It could happen as soon as tomorrow. Remember, tomorrow's a big day. We got some CPI numbers, so we'll keep our eye on that and see if that has a possibility of moving markets one direction or another. But right now, it's kind of all systems go. We continue to have a strongly bullish posture on the S&P 500, and we continue to trade above that rising 3-day moving average, represented by that green color of that moving average itself. Down below, the NASDAQ has been, of course, a superstar this year. And it was up 0.55% today, so not quite as much as the S&P 500. Perhaps that's the Tesla and Apple effect there, because remember, those stocks are going to affect the tech-driven NASDAQ a little bit more so than they affect the S&P 500. So they kind of sat out a little bit here today. There's also been some talk about the NASDAQ 100 having to do a little bit of portfolio management, as some of those stocks have received perhaps too much love. They are too big, and they're going to have to start scaling them back a little bit. So that could have an impact. We shall see. It's very rare for that to happen, but because of the state of the situation that we're in right now, this is one of those rare moments in time where the NASDAQ 100 will have a little bit of scaling back within its portfolio here within the next month or so. So it remains with a strongly bullish posture. Notice with the NASDAQ composite, it's been bullish even more often than the S&P 500 over the last 3 months. There's really just been, 3 or 4 different instances where you had a bearish posture, and only for a day in a couple of those cases. So the vast majority of the last 3 months have been strongly bullish postures on the NASDAQ. It remains above its rising 30-day moving average there as well. Let's talk about the charts on the right-hand side now. Those ones have not been quite as obvious winners as the other two. So Dow Jones was actually a fairly strong performer today. It was up 0.93%. You can see that was a very attractive 2-day rally there when you look at the size of those candles. However, because the prior week was more aggressively sold off than what you saw with the S&P 500 and the NASDAQ, you kind of just needed a very strong rally to offset the very strong pullback. So in the end, it's a bit of a kind of a mixed bag, so to speak. Despite the very strong rally, you'll notice that we continue to have a weekly bearish posture on the Dow Jones Industrial Average. That green line on the market forecast is pointed lower at the moment. Remember, you can read that in the label where it says 72.11 and falling. And then you can see it's still above its rising 30-day moving average, however. A couple days ago, it was slightly below it. That's where that moving average changed to a yellow color, just barely there, but then popped back to green here the last couple of days. And then down below, the Russell 2000 had a very strong day as well. It was up nearly 0.96%. It is still with a strongly bullish posture according to the market forecast technical indicator. You continue to have that green 30-day moving average telling us prices above the moving average. And most impressively of all, the Russell 2000 was the only chart today that closed at a new multi-month high. Notice that we closed near the high of the session. This is the third straight up day for the Russell 2000, and you were able to clear this prior horizontal resistance area back here in the middle of June. That was rather impressive because remember last week it was looking like a very high likelihood that it would go to a weekly bearish posture, but it was able to bounce exactly where you wanted it to on that moving average, and now it looks pretty strong once again. Okay, so that's what I had for you. Again, we're going to keep things tight here in the session today. We had 99 people click like on the video the last time around, and as I always say, as long as we're up and over 100 likes, I'm more than happy to give you an hour on these videos. If we're under 100 likes, then we'll keep it nice and short with 15 minutes. So if one more person would have clicked like the last time around, we'd have had another 45 minutes. So check to see if you've been doing that lately. If not, we certainly appreciate that, and thank you to those of you who do commit to doing that every single day. I will be back in action for all of our premium members tomorrow morning with our factor-based swing trading class. If I don't see you there, then I'll probably see you on Thursday with this video once again. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.